Hi everyone, it's Alessio Rastani of leadingtrader.com. Hope you had a good weekend. I want to first of all begin by showing you an important index that I watch, which has for the first time since November of last year given a minus 80 oversold reading. Okay, the last time this occurred was back in November of 2012, in fact. Now, why is that important? Take a look at this. Every time the Mcclellan Oscillator gives a minus 80 reading, take a look at what happened to the stock market. So I'm now comparing these two indexes together. All right, so take a look at this. November of 2011, we get a minus 80 reading on the Mcclellan Oscillator. Look what happened to the stock market over here. The S&P, after a decline here, it manages to bottom out and then starts a rally. All right, now take a look again at over here. So in March of that year, again, we had a small decline, then bottoms out, and then what happens? It rallies. Again, the same thing occurred in April of that year. So what happens here? It bottoms out, market sells off, bottoms out, and then starts a rally. A more pronounced one occurred in May of that year. So in May 2011, 2012, we had another minus 80 reading. Now look what happened here. That signal came only a couple of weeks before the market bottomed out. And then what happened? It started the massive rally, which went up higher. And then again, in November of last year, we had another minus 80 reading here. And look what happened here. When that signal occurred on the Mcclellan Oscillator, it bottomed out right there, okay, and then started the rally. All right. So in other words, these minus 80 readings are quite a reliable signal as to when the market is either near or at a bottom. All right. So here's the big question. We have a minus 80 reading here on the Mcclellan. Does that mean also we have a bottom on the stock market? Well, again, this could mean three things. Either it means that we are at a bottom in the market and this will start a rally from here, or it means we're close to a bottom, which means we could have a bit more decline from here before we bottom out, okay? Or there could be a third possibility, which is that this is a false signal. I actually think this is an important and significant signal, which we should not ignore, and here's why. So let's go back to the chart of the S&Ps. Oh, by the way, before I do that, I just want to make sure that you guys appreciate this also applies to the FTSE and the European markets too. So here's the UK FTSE, and you'll see the London markets do the exact same thing, just like I showed you before, November 2011, May, June of 2012, and also November of 2011, that period. And you can see each one of those signals would have resulted in a rally in the FTSE. All right, so we got one also right now on the FTSE as well. So let's take a look at the major markets. All right, guys, so we're looking at a chart of the S&Ps on the left-hand side here and the Dow on the right-hand side here. Notice that both these markets closed above their 50-day average here, which is actually quite bullish for both markets. Now, notice on Friday, the Dow managed to close above that downward trend line that you see there. Okay, but the S&Ps failed to do so. The S&Ps actually struggled to get above that resistance here. So going through this week, we have to watch two things. Firstly, if the S&Ps actually can break above this downtrend line. The second thing is whether the S&Ps can actually get above this 1660 level here, which is quite important. Because if the bears are going to maintain control of this market, then we must not get above this 1660 level. If we do so, then there's a very good chance we could actually come and challenge and retest those previous highs. For more information about trading the markets, whether you're a beginner or advanced trader, visit my website, leadingtrader.com. Thank you.